California's an energy crisis waiting to happen. The IEA has destroyed its reputation as a neutral arbiter and provider of realistic statistics and forecasts. We're running out of such entities.
Do you think that Israel's retaliation against Iran, it is expected that could have any real impact on the energy markets whatsoever? Crude oil has fallen from its highs on October 7th, with the WTI price retracing from $77 a barrel down to $70 today on October 17th. It seems that fears of an escalation in the Middle East are receding. Is that true? We'll examine that today. Prices have jumped in recent weeks amidst fears that Israel would strike Iran's oil facilities.
Israeli Prime Minister Benjamin Netanyahu signals to the U.S. how it plans to retaliate against Iran's latest attack 2 weeks ago.
And that Iran may close the Strait of Hormuz, which transports roughly 20 to 30% of the world's oil supply. However, Israel has since assured its allies that any strikes on Iran would be limited to military targets and military facilities only, avoiding civilian infrastructure. Meanwhile, OPEC and the International Energy Agency have revised downwards the forecast for oil demand due to weakness in China's economy. OPEC's monthly report said that oil demand would rise by 1.9 million barrels per day in 2024, down from the 2 million barrels per day it expected last month. So what will happen to energy markets next? Will energy spike on rising escalations in the Middle East, or will a bear market follow? Joining us to discuss this is Doomberg, head writer of the Doomberg Substack. Welcome back to the show. Doomberg, good to see you as always.
David Lynn, never a dull moment as it pertains to geopolitics and the energy markets. That's one thing for sure.
It's just been a very volatile year for both geopolitics and energy. Like I mentioned in the introduction, oil has fallen from its highs a little bit. Now, I want to revisit what you told me earlier in the year. You were on the show 6 months ago, and you said that
conflict between the U.S. and Iran, or in this case, U.S. proxy Israel and Iran, you could see $150 or $200 oil.
How close are we now, 6 months later, to that scenario? And by the way, you talked to me about this before things blew up with Israel and Iran just a few weeks ago.
Yeah, and to be clear, that was not our base case. That was a worst case scenario, and that was more testimony to the inelasticity of pricing with respect to primary energy commodities. We have a bit of a unusual take on what's going down, and one that we almost wrote about, then decided not to, but we've mentioned to a few of our friends. In hindsight, kind of wish maybe we had written about it. We think everything changed October 1st. We watched on Twitter, like everybody else, dozens of missiles piercing Iran's allegedly sophisticated air defense system, which shocked us. I would say that was an earthquake, a geopolitical earthquake that very few are internalizing. We knew immediately that was a very important event. So for those that aren't aware, I mean, hundreds of missiles, ballistic missiles of various quality and sophistication were launched from Iran. And it seemed as though many were getting through. And then even the Washington Post later, an article 2 days later, conceded that, an air base in Israel had been hit with what appeared to be precision-guided missiles. Perhaps the technology is on loan from Russia, or maybe it's domestically produced in Iran. Who knows? But the leaders of Israel now know that Iran is capable of piercing the air defense system, at least the one they had on October 1st. And we think that changed the game in sort of a mutually assured destruction way, because we've studied Israel. We study all countries through the lens of energy. And Israel is a very small country. It's the size of New Jersey with roughly the same population. It's surrounded by much larger countries, much more populous countries. And some of those countries don't like Israel very much. And Israel, because of its small size, is very vulnerable. 85% of its electricity comes from 5 thermal power plants. 80% of its drinking water comes from desalination facilities. And the 5 biggest ones account for a great majority of that number. So you're talking about 10 targets and 2 big natural gas fields that, supply the majority of its natural gas. All targets, say, if you include those. If Iran is capable of launching missiles with precision, then Iran is capable of making Israel unlivable. That was the conclusion we made in the moment. And I think that means that Israel's not going to attack their nuclear facilities and not going to attack their oil facilities. This was something we've been calling privately for since the first, and we saw confirmation of that, or alleged confirmation of that earlier this week. And look, by the time this publishes, I could be made to look very foolish. Never afraid to be made to look foolish. I mean, the only thing worse than being wrong is having no opinion. Our view is even Netanyahu recognizes that the game has changed. And in the intervening period, by the way, we're seeing the U.S. rush into Israel, its most sophisticated air defense system, the THAAD anti-missile system, much to the chagrin of the Ukrainians, that we seem to be directing resources to Israel when Ukraine needs them as well. But I think that's proof that something happened on October 1st that shocked people. And as much as everyone assumes, and it's kind of common knowledge that Israel has nuclear weapons, if Iran can overwhelm Israel's defense system and make the country unlivable, how is that really different than a nuclear weapon? I mean, I suppose it is, but that there's a real mutually assured destruction strategic aspect to this that is now on the table. I think we will see a theatrical strike on Iran, but the odds of a major energy war breaking out in the Middle East seems to have gone down.
On the retaliation of Iran's story, Israel has said that it would limit, or it intends to limit, strikes to only military facilities. So you are correct in your prognostication there. I think that the worry is that things may get out of hand from there. How confident are you that things will be contained to only a tit-for-tat military facility strike, and it won't force or incentivize, should I say, the Iranians to do something like closing the Strait of Hormuz?
Yeah, I don't. So again, game theory says that people act rationally, and the big concern is that extremists on either side of both countries precipitate a cascading series of escalatory counterstrikes to the point where you lose control. I don't think that's the base case, but it's not a zero probability. The markets have severely discounted it. The price action on oil this week is inconsistent with the market ascribing a high probability of events spiraling out of control. And by the way, I hope that's true. Like, nobody should be hoping for such a catastrophe to unfold. So I hope that saner heads prevail. War is always a failure of diplomacy. There are no winners in wars. They're just degrees of losers. And so we should hope for that. How confident am I? I'm more hopeful than confident.
Sure.
The market is sometimes wrong, but you saw, like I did, oil drop from 78 to 70 in the blink of an eye, basically, in the past week, because of these headlines that are coming out. And I do think they're very consistent with the fact that October 1st was, in fact, a game changer. The title for the piece that we had sort of drafted but never published was October Surprise, because we were surprised. And by the way, I was watching it on Twitter. I'm sure you were. And then to see the spin afterwards, like, none of the missiles got through. Like, I saw the missiles get through. You saw the missiles get through. Some of that film was really astonishing. And that's a real game changer. I think it landed home that the Iron Dome and the other sort of, David's Arrow and the other advanced air defense systems might not be impenetrable. And if that's the case, because of Israel's inherent vulnerabilities, which everybody recognized, look, it's small, it punches above its weight, it's surrounded by enemies, but it doesn't take many missiles to really do a lot of damage to Israel. And I think as a demonstration, as a capability demonstration, October 1st was way more important than the strategic impact of what was destroyed.
So what do you think Israel will do now that the Iron Dome system has shown vulnerabilities, let's say? Do you think that they'll double down on striking Iran and its allies, pursuing a perhaps offense is the greatest defense doctrine?
Look, you have an enormous sort of soup of complexity going on here. You have the election in the U.S., and the Biden administration / the Harris campaign probably doesn't want a war breaking out in the Middle East ahead of that election. Benjamin Netanyahu, Israel is a democracy. He is not a dictator. He has his own political pressures internally, his own scandals to deal with. He's got forces on the right and forces on the left that are angling and jockeying for various, domestic political reasons. And so it's very complex. And I think in the end, there seems to be a concerted effort to find the minimum acceptable retaliation that allows Netanyahu and his government to say they responded, but not so hard that it forces another response from Iran. And so time will tell. We
How
hope that that's what happens.
how would, in theory, the Iranians shut down the Strait of Hormuz? So one thing they could do, yeah, I'll let you answer that.
I don't think. I think that's a bit of a canard. I don't think that's in anybody's interest for that to happen. I think more dangerous would have been overt attacks on Iran's export terminals and so on. Like I don't think it's in anybody's interest to shut down those straits. I think, look, there's a lot of people who are long commodities or talking their book or sort of betting on that outcome. I think that's a low probability event. Again, everything we're saying right now could come back and come back to bite me. But this is my honest view that I believe right now as I'm talking to you, that I think that's a bit of a canard.
Is that even possible from Iran? Because here's the argument. You have Iranian ships potentially blockading the strait, but those could be shut down or destroyed quite easily by the U.S. and its allies. Case in point, 1988, Operation Praying Mantis, the Iranian Navy was destroyed in a matter of less than 48 hours. Sure. They could also use missiles, though. That's the other argument. They could, in theory, do what the Houthis did in the Red Sea, which is to deter ships from entering the Strait of Hormuz with long-range missiles. Is that
I think that's the most likely. I don't see a nation state closing down those straits. I think more a proxy armed with missiles. Like we see in the Red Sea today, right? And so I think that's I put that as a low probability event. And again, if the markets thought that was possible, we would not be sitting at literally flat $70 WTI as I'm talking to you, looking at my Bloomberg. I mean, I just don't think the market is pricing that in. And so that's a low probability event. That's the type of stuff that gets a lot of clicks, which I understand. Of course, I mean, we're all in the click business in one way or the other, but I don't think that's a high probability event.
I understand. And $70 barrel, $70 a barrel, which is what we're looking at today. The market is pricing in. What is their base case exactly? Because it was $77 just a week and a half ago, and now it's gone down to basically its late September levels.
Yeah, I think it's basically the market is in equilibrium. If you look at the landed cost of liquefied natural gas in Europe at $12.50 times 6, you basically get the oil price of 70. It kind of seems like the market is saying physical commodities are well supplied, and they're putting zero geopolitical price premium on oil right now. And I think zero is probably the wrong number. Like if you pushed me, I would say the risk is greater than zero, and there's probably more risk to the upside than downside from here. But if peace does break out, of course, everything goes down because like we're well supplied in the primary energy markets, especially natural gas, coal. There's plenty of it. Engine switching is happening at a remarkable rate. I know we've talked about that before, but just yesterday in the Financial Times, there was a huge spread about how China is just rapidly changing their long-haul trucking away from diesel towards liquefied natural gas, which is affecting demand for oil, and it would be a significant headwind if we had peace in the Middle East right now. So I think, the market is pricing in no risk. We would prefer to fade the spike that would come as opposed to try to predict it and game it. So if you see the straits closed and oil goes to 150, the easiest trade in the world is wait for it to pull back to 135 and then buy puts at half the strike because shortages are always followed by gluts, and those gluts come pretty quickly. And so instead of trying to predict such an outcome, I think the smarter play is to wait for it to happen and then fade it.
So bottom line, finishing off in the Middle East, do you think that Israel's retaliation against Iran in some form, which is expected, we just don't know exactly what they're going to do and when it is expected, that could have any real impact on the energy markets whatsoever immediately?
I don't think so. And I think what you'll see is the description of what went down will be radically different in the Western media versus the Middle Eastern media. And that would be the way that everything sort of simmers down. I think Israel has its hands full in Gaza and in Lebanon. Its economy is struggling. There's a lot of political division in Israel right now. There's some questioning of the wisdom of some of these adventures. Netanyahu is not as firmly in place as we might believe over here. And so I think he himself, who is a survivor, right? I mean, he's politically very savvy. I think he's been around for a very long time. He will navigate a way to thread the needle. That's what the markets are telling us. That's what I believe October 1st taught us. And that's our base case. All bets are off if we're wrong. Who knows what happens? Some extremist comes and does a terrorist attack that then leads to a series of escalations. You always have to have that risk, but the market is pricing that risk very low right now.
Well, let's talk about longer term trends. Perhaps the market is pricing in this IEA report that was just released. Take a look at my screen here. I'll let you comment on this. This is from Reuters reporting on it. The age of electricity to follow looming fossil fuel peak, IEA says. The world is on the brink of a new age of electricity with fossil fuel demand to set to peak by the end of the decade, meaning surplus oil and gas supplies would drive investment into green energy, says the IEA on Wednesday. It also flagged a high level of uncertainty as conflicts embroil the oil and gas producing Middle East and Russia. Basically, oil demand peaking by 2030 at less than 102 million barrels per day. LNG demand growth to be outpaced by capacity growth by 2030 are the key highlights of their findings. What's your reaction?
The IEA is indistinguishable from Greenpeace or the Sierra Club, in our view, and their pronunciations can be safely ignored. Basically, this is we call it wish casting. The demand for fossil fuels is infinite. All primary energy sources are additive. Doomberg's postulate is that every molecule of fossil fuel produced in the world will be burned by somebody somewhere, and local restrictions against such activities merely change who gets to benefit from that privilege. We will be burning way more than 102 a million barrels a day of oil by 2030. We will be burning more coal in 2030 than we do today. If there's an overcapacity for LNG in the world, suddenly we'll build a bunch of machines that can burn natural gas and do work for us. The global south, 7 billion people, operate at less than a third of our BTU per capita energy consumption that we do in the West. They would all like our lifestyle. We're not going to stand in their way. The gating function of demand for fossil fuels is production. Europe, for example, doesn't produce anything, and so what they think about this kind of stuff is irrelevant. And so I just think it is it's just nonsense. The IEA has destroyed its reputation as a neutral arbiter and provider of realistic statistics and forecasts. We're running out of such entities, but we would file this report in a polyethylene lined bin.
2030, though, oil demand to peak. I mean, what core assumptions are behind that kind of forecast?
There's a couple of fatal flaws, which is they are totally ignoring what's known as Jevons paradox. Energy efficiency is going to reduce our demand. No, increased efficiency in the consumption of energy just increases the net demand of energy over time, which is why when the steam engine was invented, the demand for coal skyrocketed because it became easier to mine for coal. The demand for energy is infinite. Energy is life. All humans everywhere want a higher standard of living. Your standard of living is defined by how much energy you get to harvest. All humans everywhere want a higher standard of living. Like, this is the greatest mega trend of all time, and why people continue to bet against it is baffling to me. So no, whatever we produce will burn. People will burn anything that's produced. And there's always going to be somebody willing to overproduce. We are swimming in hydrocarbons today. We just did a piece on Turkmenistan. They have basically the same natural gas resource base that the US does, and they produce only 7% of what we do. Like, there's an enormous amount of cheap energy that will be tapped. There's 7 billion people that live in energy poverty today. That is an infinite source of demand for energy, and it will be served. And forecasts like this, which are hyper-politicized, not based in reality. So the first is that, energy efficiency, Jevons paradox. The second big flaw in this piece is assuming that demand is what drives production. It's wrong. It's just wrong. It's just not true. Anybody who's spent any time in industry knows that's not true. The more you produce, the more people will burn.
Okay. I have here the report itself. So let's take a look at this paragraph. From 2023 to 2030, so the next 6 years, 5 years, growth of clean power sources outpaces electricity demand growth globally by 20% under current policy settings and market conditions. Renewables account for the vast majority of clean power growth to 2030, and renewables investment steps up from around $680 billion US to $850 billion in 2030. I think that's another key assumption they're making. Let's address that.
It's nonsense. I mean, look at the demand for electricity just from AI alone in the US now. Like we're going to see an explosion in demand for electricity that will far outpace any quote unquote clean power capacity we bring online. Look at Microsoft reopening up 3 Mile Island, and we're talking about burning natural gas in the US in enclosed pods where natural gas goes in and data comes out, and you don't have to connect to the grid and you don't have to worry about transmission lines. Like these people, there's an expression for this kind of analysis, which we used to joke about when I was in the industry. It works in universities. Hey, this is spreadsheet dwellers who have never operated in the real world. They wear nice clothes. They go to flashy buildings. They go to nice parties. They feel really important. They have no earthly idea what they're talking about. Like to assume that a bunch of bureaucrats in Europe understand how the electricity market is going to unfold in the next 6 years, let alone next 50 years, is insane. This is a total waste of time.
It begs
yeah, go ahead.
It begs the question, though, Doomberg. So we do know that electricity demand will rise over the next 5 to 7 years. What will fill that gap in demand, if not for renewables?
Natural gas and nuclear. Renewables can't fill the demand. So here's a big fallacy. People assume electricity is electricity. It's not. Comparing stable baseload, high-quality electricity from a nuclear power plant to intermittent renewable energy and electricity from wind and solar is like comparing bananas to a bag of potato chips. They're both calories, they're both food, but nobody would confuse the two for nutritional value. Microsoft is voting with its feet, right? We're 3 Mile Island, like the home of the Great Meltdown, the dagger to the U.S. Nuclear industry is being reopened. Not the one that melted down, but the reactor next to it is being reopened by Microsoft, paying a very heavy price. Price is irrelevant. What matters is consistency of supply, because this will happen. And so it'll be natural gas until we could spool up nuclear, and then it'll be both because all primary energy is additive. Nobody's going to turn off cheap natural gas electricity to run their data centers. No, wind and solar can't do the job, period. And so they won't. So this is just, again, this is university stuff. It works in universities.
All right. One more point from this report, going back to the projection of 102 million barrels per day by 2030. And then it says here in the report, it falls back to 2023 levels of 99 million barrels per day by 2035. Overall, oil consumption is pulled down by a reduced demand for oil in road transport. Surging EV sales since 2015 have already displaced around 1 million barrels per day of gasoline. I think they're making the assumption that if this trend continues, we're going to see a peak and then the curve starts to flatten and then reverses. Okay, so in some parts of the world, like China, EV sales are surging. Transport trucks are being electrified. Are they right, though, in making the assumption that road transport will continue to be more electrified into the future at this rate, at least?
What happens when a car reaches end of life in the U.S., David? What happens is it gets shipped to the emerging economies, and it has a whole second and third life. Very rare is a car total. Of course, there's accidents and things like that. Sure. If this is true, which it's not, all it would mean is temporarily it'd be really cheap for people to buy gasoline in these countries. And guess what they'll do? They'll buy gasoline. We are going to be, if there was a security that gave you 50x return on the delta between this forecast and reality, I would mortgage my house and get long it. We are going to be producing and consuming way more than 99 million barrels a day of oil in 2035. That's happy talk from people who know nothing.
What do you think is the future of powertrains for cars, either commercial vehicles and or private cars? The gas, is it going to be hydrogen? Is it going to be electricity? Is it going to be hybrid? What do you think makes most sense?
Well, the thing that has to happen is the existing fleet will persist for another 12 years, as is, basically, because these things don't turn over very fast. I mean, all the cars that you own now aren't going away. That's the thing. People conflate new car sales with the proportion of cars in a fleet that are burning gas or diesel or those types of things. It's meaningful, but again, all energy will be consumed by somebody somewhere. The dominant drivetrain, we think, is gasoline, battery, electric hybrids. BYD has a car right now that you can buy. BYD is the biggest electric vehicle manufacturer in the world, twice the size of Tesla. Most people don't know that. They have a plug-in hybrid that sells for $14,000 US in China, that on a full tank of gas and a full charge of the battery can go 2,000 kilometers. Like, how is anything going to compete with that? The problem is solved. It's going to be plug-in hybrids. And the cheaper gas gets, the more people will use it. And look, it's cyclical. There'll be a glut. Prices will go down. People will say the world is ending for oil, and these assets are going to be stranded. It's forever thus. The slope of the demand for primary energy integrated across the globe is up and to the right with a gentle sinusoidal wave aspect to it. And this is a great, great mega trend of all time.
This is according to their research. Okay, the IEA, another separate report. Electric car sales neared 14 million in 2023, 95% of which were in China, Europe, and the U.S. So 14 million new electric cars registered globally in 2023. That number is up significantly from the previous couple of years. This is more than 6 times higher, it says, than in 2018, just 5 years earlier. Okay, so that was the past trend. Going back to my question, what will be the future trend? Because a lot of car companies that have promised to make an all EV fleet by 2030, 2035, they're now taking that back. They're now saying, hey, look, let's extend our ICE vehicles because that's what customers want. Their EV sales are flopping.
Yeah, look, 14 million sounds impressive until you go to your Google machine and type in total number of cars on the road worldwide, and it spits back 1.475 billion. Right?
Yeah.
This is a very heavy boat that is difficult to turn. These cars, unless they're crashed and totaled, basically last forever. And so, like, again, there's 7 billion people. If you just take the 3 countries that, Europe, not country, but, Europe, the US, and China, the rest of the world is 6.5 billion people, right? Like, none of them are buying electric vehicles today. They're buying any vehicle they can afford. They all want a vehicle. They all want a higher standard of living. And so, no, I just, that if you go back to that paragraph, you don't have to pull it back up, but that's is sort of, here's an example. Another one from my time in industry. 1 part per million of a pollutant in the water stream doesn't sound that impressive, right? But 1,000 part per trillion sure does. They're playing with big numbers without giving you the proper context of just the size of the existing fleet. There's 1.5 billion internal combustion engines on the earth today. The percent of new car sales that happens to not have an ICE engine in it is an afterthought. Look at Norway. Norway has effectively displaced virtually all new car sales and made them electric, BEV or plug-in hybrid or mild hybrid. Their demand for oil is flat. It hasn't gone down. It's because there's the fleet effect. It takes forever. So anybody talking confidently about 2030 collapse in the demand for oil, look, if demand for oil temporarily dissipates and prices collapse, guess what happens? Demand goes up. Like the cure to low prices is low prices, and vice versa. It's cyclical, but people have this tendency to draw tangent lines to sine waves, and that's just a fallacy. Like this, I honestly, you called it research. I think that's a very generous descriptor of the IEA report. That's very indistinguishable from puff propaganda.
Well, there's a lot of assumptions behind their forecast. But okay, so do you think, 2030 notwithstanding, do you think there could come a point in the future, whether it doesn't matter when, we don't know when, but could there be a point in the future when oil demand peaks? Is that theoretically going to be in the works?
Not in our lifetime. No. Again, demand is not relevant. It's production, and I don't believe in cheap oil. And I think the definition of oil is changing, and I think we have a super abundance of natural gas. And what's oil demand if you're going to replace it with natural gas? We're still going to power much of our life with fossil fuels. And so, no, over the next 2 decades, the resource base should be modeled as effectively infinite. And there's an infinite demand for what we produce. All right. That's our view. I know look, I'll give you a number. By 2030, have me back on in 2030.
Okay.
Over under 106 million barrels a day.
Yeah.
That's my guess.
Just going back to the Middle East for one more minute, Doomberg. Suppose tensions do escalate there. We have a shortage of supply due to a shock Do you think that the strategic petroleum reserve in the U.S. will be sufficient in quantity to overcome or offset these shocks?
We're way better prepared than most and way better prepared than we were in the 1970s. But that storm would last 3 to 6 months. So yeah, we're probably all right. I mean, there are other countries on the sort of the cost curve that would get slammed more than we, China among them, by the way, which is another reason why we don't think that things are going to get too crazy in the Middle East. China is in there and very dependent because they're net short oil, bigly. And so, that's another dampener to crisis. Iran and China have a very close and complex relationship. The U.S., Canada, Mexico. If we close the borders, we'd be pretty much fine. It would disrupt the market significantly, but we are a net energy exporter now. The U.S. is a global energy gigapower. That's a far, far better position to be in than, say, in the 1970s when everyone in the U.S. assumed peak oil was real and we were short oil and the Saudis and the other members of OPEC had us over the barrel, pun intended. That's no longer the case. And so we would be mostly fine. We have oil, we have gas, we have uranium, we have fertilizers, we have farmland, we have corn, we have soy, we have wheat, basically we're self-sufficient. There's a few tweaks to our refineries that would need to be made because they're kind of optimized for heavy oils, and we're producing light, sweet crude and even lighter crudes in the shale patch today. But by and large, we would be dealing from a position of strength in such a scenario.
Moving on to domestic oil policies, I want to play for you this clip from California Governor Gavin Newsom. I'm just going to show you the entire animation here. I want to get your response. It's a minute long. Take a listen.
It looks like big oil bigwigs are up to more of their oily shenanigans here in California. They want to keep drilling in our communities, then export that oil out of state, all while keeping our supply dangerously low and prices painfully high for California drivers. These same big oil execs are in cahoots with Donald Trump, pushing prices even higher during election season, hoping to scare voters into voting for their guy. They know if they scratch his back, he'll scratch theirs if he wins. By overturning critical environmental protections and letting big oil call the shots. That's why California is passing a law to require oil companies to increase their gas supplies to prevent price spikes on you at the pump, saving consumers billions. I'm cutting off their dirty politics and telling oil CEOs and Donald Trump to export their lies somewhere else.
I love it.
Pass a bill to make the gas suppliers do what exactly?
So look, we have, again, a sort of counterintuitive interpretation of events here. Donald Trump is the worst thing that could happen to oil and gas equities. Here's why. Joe Baby Drill is not good for the equities of oil and gas companies. They have no discipline. And in a perverse way, the Gavin Newsoms and the Joe Bidens and the Kamala Harrises of the world and their legions of bureaucrats from the EPA act as a gating function to supply, which is what the oil and gas companies actually want. So if Trump wins, we will see an avalanche of new drilling, which is actually very bearish for oil and gas equities. Like, they make all their money on price, but they're seduced by the concept of growth, and they have no track record of discipline. So Gavin Newsom is the best thing that could ever happen to the oil and gas industry. The more some sort of discipline is enforced on them and they can only drill so much, that keeps prices higher, which pads their profits. So even though 95% of oil and gas executives probably will vote for Trump, if they were voting for their pocketbooks, they would vote for the Democratic Party because they can't impose discipline on themselves. Now, I think the Trump win would be very bullish for supplies, which would be bearish for price and deeply bearish for energy equities. And so that the whole thesis of that, political video that you just played is that somehow producing more is good for the oil and gas companies. I mean, it's funny, but it's just not true. And so, that's
let's
our
just
view on that.
Take a look at the theory of this legislation here. I have the legislation opened up. Governor Newsom signs legislation to prevent gas price spikes and save Californians money. This legislation allows the state to require oil refiners to maintain a minimum inventory of fuel to avoid supply shortages that create higher gasoline prices for consumers and higher profits for the industry. Would this work theoretically?
So this is a very complex situation. We wrote about it recently in a piece called Baywatch. California is an energy island because California requires a very specific and cleaner burning gasoline formula that the rest of the world doesn't produce. It is beholden to a small oligopoly of refiners in their state. That's all true. I note with interest that after what you just read was released, Phillips 66 announced, I believe yesterday, that they are closing one of their major refineries in Los Angeles. Anytime government interferes in the market like this, prices go up, right? Which is proof of what I just said, by the way. High prices means more profits.
So it goes up. It's supposed to make it go down. I mean, why would it?
Right, please. Any government interference in a market economy causes price to go up. Look at the price of gasoline in California today. Show me where Gavin Newsom has lowered prices for Californians, right?
Right.
So what happens is California creates a very specialized blend that nobody else makes. And that means necessarily the trading in that, the futures, for example, so that refiners can hedge their exposure to the commodity stuff is very thin, which means small players can interfere in that market and move prices around. These are all consequences. These are all things that California invited to itself. By the way, there are no pipelines connecting California to the rest of the U.S. Any incremental supply of either oil or finished products has to come by sea. And Northern California in particular is an energy island because there's no pipelines connecting the north and the south. California is an energy crisis waiting to happen. And of course, who will be blamed for it? Of course, big oil and all that stuff. That's a very slick ad. Look, Gavin Newsom is a talented politician, not to be underestimated. I mean, we're not super political here, but we can appraise somebody's skills. He's a very skilled politician. That is a slick video. It's totally wrong, but it doesn't matter. It's not going to be wrong in ways that the average person is going to be able to deduce just by watching it.
Can we just finish off on this energy crisis waiting to happen? What do you mean by that? What's wrong with their policies fundamentally?
Okay, let's just take a look. Northern California, 3 refineries, period. 11 days of inventory of gasoline on hand. And one of those 3 refineries sits on a giant fault that is a couple of decades overdue for a big earthquake. So what happens if that earthquake comes and that refinery is knocked out? You're talking San Francisco, right? It's truly, we're sleepwalking into a crisis in California. And, government mandates, look, it's not a friendly place for oil companies to do business, right? And so they don't want to be there. Exxon left the state famously after a refinery explosion. And so what we're seeing is the people just don't understand, like, as critical as energy is to life, not having it is a big deal, right? And so just pulling it up, the Richmond refinery, that's right, it's on the Hayward Fault. It's literally 10 miles from the line itself. And we haven't had a major earthquake there since 1868. And so we're 16 years overdue for one. So they produce, by the way, 40% of the gasoline that Northern California consumes. One refinery sitting on a fault produces 40% of the gasoline, and the state has 11 days of inventory. Do the math. It's going to happen. It's just a matter of when.
We'll take a look at some of these stats from the California Energy Commission now, Doomberg. In the first 3 months of 2024, Californians purchased over 100,000 zero-emission vehicles. Currently, in the state, the current total is more than 1.8 million zero-emission vehicle sales, and 23.9% of all new cars sold in California last quarter were zero EVs. And so the state is really pushing the EV narrative and doctrine. Where is this electricity going to come from in the future is my question, because presumably if this trend continues, electricity demand will skyrocket.
It's the most expensive electricity in the continental U.S., right? So we wrote a piece about how wherever you look, there's a strong correlation between the amount of renewable energy you have on your grid and the cost. And California is a classic example. There's no better place in the country to do solar. It has an enormous amount of solar, and it has the most expensive electricity in the country. Why? Because introducing solar into a grid makes the operation of that grid more difficult, which increases the total cost the consumers pay for their bills. So again, this is sort of IEA, but Gavin Newsom, these projections are inconsistent with reality. And so we have a lot of subscribers. By the way, interesting fact, the number 1 state for Doomberg subscribers is California. And that's because they're home to many frustrated conservatives who are basically left out of politics, and they enjoy reading our work. We have great respect for Gavin Newsom as a politician. He's a very skilled political actor. But there's going to be a crisis in California. It's only a matter of time, and it'll be a bad one when it hits.
Doomberg, thank you very much for your updates. Great analysis as usual. Tell us where we can find your work and what you're working on these days, what we can expect from the next issue, basically.
Yeah, so you can find all our work at Doomberg.com. We're actually writing a piece on Taiwan through the lens of energy, which is a really fascinating story to unpack, especially given the geopolitical tensions that seem to be rising over there. So that's next up for us. We'll see if we ever do write this piece on Israel that I referred to earlier. But there's never a shortage of things to write about or to talk about with you. So I really appreciate the opportunity to come back on and looking forward to the next one.
Yeah, I'm looking forward to reading your piece on Taiwan. I was born there, so that could be a interesting read. Great. Thank you very much. Appreciate it. And thank you for watching. Don't forget to like, subscribe, and follow Doomberg in the link down below.